Good morning. Welcome to Forex In Four. Today is Monday, October 31st, 2011. Happy Halloween to everybody. Trick or treat. We've had some crazy weather here on the East Coast, which has been more of a trick than a treat. But it looks like the markets are getting back to normal. And when I say normal, I mean craziness as usual. So for the first time in a while, we're starting out with somebody outside of the euro, and we're actually looking here at dollar yen. Now, this could be a little bit of a trick or treat for some as well, depending upon what your position was going into this. All right, but you can see here we're looking at a 30-minute chart of dollar yen, and indeed the Ministry of Finance in Japan, the government that is, came in with a unilateral intervention overnight because yen had been strengthening for some time, and it got down to about 75 was it 75.60 area, which was a post-war all-time high for yen. Well, you can see that they came in and they did a unilateral intervention, which essentially means they just jumped on the market, started selling yen, and boom, you got this massive spike higher up here to above 79. And we've since pulled back some, but we're sitting just around 78, and that's a huge move. It's the third time that Japan's intervened in the currency this year, and the previous two times it's been unsuccessful as far as being able to hold those levels. But if you think about it, this is the government who's come in and done this unilaterally. So if they can get some sort of Bank of Japan support behind it, then they could potentially see, some yen weakening. Now, one of the things that's also important in Japan to remember is that they still have this massive deflation. The economy's there is slowing a bit. So who knows? Maybe they do go on a money printing binge, and this could go higher. I mean, I have to tell you that. It looked like the market was thinking that they didn't have the will or the ability to go ahead and intervene the same way that the Swiss National Bank has, and frankly they haven't. The Bank of Japan hasn't even stepped in, but this is the government right here doing this, so that's a pretty big move. So you can see dollar yen back up above just 78, and you can see that the ranges were so tight that all these pivot points are down here. If we look at something like euro yen, all right, it gives us a little bit better of a look, but you can see euro yen pulled up, and now it's pulling right back to the the R3 resistance area, which was an initial resistance area, but we're sitting right around 109 in euro yen. So that was a big move there. All right, so we have some risk aversion going on in the markets. I'm just going to show you pound dollar. All right, you can see pound is also falling off here. All right, it sort of coincides with the time that the intervention took place in Japan, but don't be fooled. That's not the major cause of that. What we're seeing in the UK is that they had home prices come out, and they came in lower than expected. It shows declines at 2.8% for the month. Although they have mortgage approvals, which are a little bit higher, and net consumer credit was also a little bit higher. So tomorrow we're going to get the GDP estimates in the UK. Or is it tomorrow? Yeah, GDP report tomorrow in the UK, and that's going to show us how the economy is doing there. Now, you got to remember we've got this government austerity that's been taking place in the UK, so it's going to be interesting to see, how they're doing outside of the reduction in government spending. Now, just recall for a second here that government spending is one of the four components of GDP. So if you are contracting government spending, okay, that could have a negative effect on your GDP, but it doesn't necessarily mean it's a bad thing. I mean, I know that here in the U.S. they think that. That's why the government just keeps spending all this money to try and prop up GDP figures as every other sector of the economy declines. But UK, they've got something different going on, so we're going to see. But you can see here, pounds pulled back. All right, dollar strengthening, risk aversion. That means stocks are lower. Okay, we can look at S&P 500. Okay, you can see stocks are lower. Okay, and we've also got oil, which should be down as well. Okay, just a little bit down on oil, back there, and I guess gold, let's take a look at as well. All right, so gold sold off a little bit on that move. So let's go to euro and see what's happening in the eurozone. All right, same move happening with the euro. You can see that actually looks very similar to that gold chart, right? But what we had in the eurozone is, okay, we know about the intervention, or excuse me, the solution from last week that they came out with, the resolution for the debt crisis, but now people are starting to pick it apart and take a look at it and see what's happening. Now, this week there's a G20 meeting of finance ministers, so they're going to come in and make sure that everything's above board and blah, blah, blah. But I'm not necessarily certain that this is going to affect how the bailout package works, but what we will see is what perhaps the IMF's involvement in the EFSF is going to be. In the meantime, just getting to normal economic data there. Consumer prices were a little bit higher than expected in the eurozone. They're expecting 2.9%. It came in at 3%, which not a huge move higher, but it's just one of those things where they'd like prices to be coming down, not going up, because the ECB does have that singular mandate to regulate prices. So we're going to see what happens there. Also, unemployment is coming in around 10.1%, which is also a little bit higher. Now, in the eurozone, we're going to get the the interest rate decision. It's going to be on Thursday, but they're not expected to do anything with interest rates. All right, just going to go over here to the Aussie. Okay, let's look at the Aussie. It's the Aussie selling off here a bit as well. And I want to back this out on the, let's look at this on the 2-hour chart just to take a look here, because it looks like we could be setting up for maybe another move lower. All right, they've got their interest rate decision tomorrow, RBA, and I'm actually seeing some estimates that are showing that they are looking to reduce rates by 25 basis points. Now, I hadn't seen that before, so I don't know if that's a good figure. I'm going to try and get a little bit more color on that as the day goes on, but there's estimates now for a reduction of 0.25%, so that could have a negative effect on Aussie. All right, and then on top of that, we've got on Wednesday we have the FOMC meeting where the Fed's not expected to do anything about interest rates, but they could start talking up intervention again. So we could see some more, range-bound volatility. If the Fed starts talking QE3, boom, we'll see some dollar weakness. We'll see a pop in these risk currencies and also in stocks. Let's see, last news of the week, and that's big news. This is a really pretty heavy week. Is non-farm payrolls on Friday. We'll just go back to Euro. And we've got non-farm payrolls coming out here in the U.S. We're expecting to add 95,000 jobs. That's the median, or the mean, I guess. No, it's the median, I guess. The average expectation, and the unemployment rate is expected to remain steady at 9.1%. So a lot going on this week. G20 meeting. We've got some of these interest rate decisions from central banks, and just other economic data coming in, which is really going to paint the picture. I mean, the idea was, okay, now that the eurozone thing is finalized, we need to get these economies going back, towards growth. But right now, it's the kind of thing where it's possible that these things have dragged on too long and really eroded confidence to the point that it's going to be tough to jumpstart these economies without, some sort of central bank or government action. And that's always a problem, because, that creates these distortions in the market, which, as we've seen of late, have made it much harder for things to get back to usual as it is already. So anyway, that's kind of what we're looking at here. The big news is that Japanese intervention. Whether or not this holds remains to be seen. And then G20 meeting this week, and wow, look at that on a 2-hour chart. That just looks ridiculous. So anyway, that's what I've got for today, gang. Good trading to all.